What do you think could be, let's say, on your first category on fun? It is what it is. Betting markets are there. People bet on sports games every day and they have a good time. On risk, of course, we have all futures market, commodities market that obviously, that's what I would say is approved by regulators to use what you mentioned. On the information side, what could be the catalyst that would enable us to have this? And let's say have people be compensated for the information. Because you can argue now, let's say we're an expert in a certain field. I'm an expert, let's say, in crypto compliance, and I can get paid for it, and there's a service that I sell. In what you're saying, like, what could be the catalyst for it to be more mainstream in ways that we don't have right now?
So let me walk you through a very concrete vision.
Yep.
So in companies, for-profit companies, one of the biggest decisions they make is keeping the CEO or getting rid of the CEO, right? That's an example of a big decision. They make lots of other decisions, but that's probably the biggest decision they make. So here's how we could make a market to advise that decision. Should you keep the CEO? You have a stock market, trade stock for cash. And when you trade in a stock market, you're supposed to ask yourself, here's the current price. Is that too high or too low? And what you compare it to is you say, let's imagine all the situations a company could be in. What's the company worth in each situation? Average that out, come up with my estimate of the value of the company. And if the price is lower than that, buy. Price is higher than that, sell. That's what you do in an ordinary stock market. Now, we're going to make two new stock markets. They're just like the regular one, except they're called off if a condition isn't made. We're going to make a trade, except we're going to cancel a trade if a condition isn't right. So one of the markets is going to be, we only have the trades happen if the CEO stays in power past the end of the quarter. And in the other market, we only have the trades happen if the CEO leaves by the end of the quarter. So these are conditional or called off markets, and we're going to get a conditional price. In one market, we're going to get the price of what the company's worth if the CEO stays. And the other market, we're going to get what's the company worth if the CEO leaves. Those two different prices will tell us the story of whether speculators think it's worth keeping them or not. That's an example of a decision market. So here's the key structure. We have an outcome. Here, the stock price. That's the thing we want. And we've got an asset tracking that outcome. So we could do it for a crypto firm if they got a coin, right? So we have an outcome that tracks pretty close with what you want for the decision. Next, we have some concrete choices here. Keep the CEO, get rid of the CEO. And what we ask the market is, conditional on each of the choices, what's the outcome? Now, that directly advises a choice. So here, the customer should be the board of directors of the company. They should be willing to create and subsidize this market to tell them advice about whether to keep the CEO. But we can do this for all sorts of other big and small decisions in companies. So raising new capital, restructuring, mergers, acquisitions, any big decision, we could ask the market, well, among these options, which one looks best? So we can do this for lots of other organizations, for lots of other decisions in personal life. We could walk you through lots of examples, but start to realize there's a whole world of people and organizations making big, important decisions, and we could just put a market right next to them directly advising that decision.
So let's use the example you mentioned, right? So let's say I'm on a board of directors of a company, and we put this market should the CEO remain or let's say get fired, right? And in a way, this information would give us an indication of how the actual stock price would trade depending on that decision is made, whether he's fired or not.
Right.
How would you argue? Like, I would argue, putting my lawyer hat on, that if, let's say, the information clearly shows that, if CEO is fired, the price of a stock will go up, for example, then there's also fiduciary duty on behalf of the board members to actually follow on that decision.
So you asked me, how could I change the world here? Now I'm going to say, if I just create these markets, and let's say I do the entire Fortune 500 for 5 years, okay? And I track the companies that follow the market advice and the companies that defy the market advice, and I say, which pool does better? If the pool that follows the market advice does better, now I've got a pretty strong presumption again on the board to say, hey board, you're not doing your responsibility if you defy this advice. And you could now scare the boards of directors into following this advice, and you would change corporate accountability dramatically for for civilization on the basis of this really tiny project, which was to make 2 markets on each for the Fortune 500 and run it for 5 years.